As we set our sights for what comes next, the fact is that global brokerages are quite optimistic about Indian markets in 2026. The Sensex is seen racing towards the 94,000 to the 95,000 mark, and we could see a 30,000 level for the Nifty. In fact, going across to Soumit Sarkar, who's putting together the top themes and stock ideas that global brokerages have for India in 2026.
Firstly, I'll start off with what's the target that brokerages have set for the benchmark indices for 2026 for Nifty and Sensex. HSBC and Morgan Stanley have given the Sensex target, and HSBC has set that target at 94,000 and Morgan Stanley at 95,000. This is the December 2026 target given by both the brokerages. Now, HSBC believes that the worst of earnings downgrade is behind, and Morgan Stanley is of the view that the long-term story is gaining strength with government policy action. When it comes to the Nifty 50 benchmark, Jefferies has a target of 28,300, BofA has a target of 29,000, Nomura 29,300, and JP Morgan a target of 30,000, which suggests an upside of at least 15% from the current levels. Other targets suggest an upside of anywhere between 11 to 14%. Now, JP Morgan is expecting India's growth to be around 13 to 14% for calendar year 2026 and 2027, and they also believe that valuations would continue to remain at a premium compared to other markets. Now comes the most interesting part, and that is the stock-specific action that various brokerages and sectors that the various brokerages have recommended. HSBC has given a list of multiple stocks. Kalyan Jewellers, M&M, SBI and ICICI Lombard are the key stocks that would see tailwinds in 2026. Based on risk-reward ideas, they have three stocks: Infosys, Phoenix Mill and Marico. And these are the top choices in favored sectors, and that's Hindalco, Apollo Hospitals and Adani Ports. Now, if you follow by Jefferies, they are overweight on lenders, that is NBFCs and banking names, autos, cement, hospitality, telecom and real estate companies, while they are underweight on staples, IT, industrials, that is capital goods and pharma names as well. They have also given top 10 stocks as per them. It's Axis Bank, Bharti Airtel, Chola Finance, TVS Motor, M&M, GMR Airports, JSW Energy, Max Healthcare, Lodha or Godrej Properties and Ambuja Cements. Apart from that, Bank of America, now they are preferring defensives, and they're also bullish on telecom and hospital stocks, and they're underweight when it comes to industrials, again capital expenditure here as well, and cement names for 2026. When it comes to Nomura, they are bullish on financials, pharma, IT services, consumer discretionary, real estate, internet stocks, that is Zomato, Swiggy, cement companies, telecom, manufacturing. They are neutral on autos, oil and gas sector and the metal names after the sharp run-up that we have seen in 2025. And they are cautious on consumer staples, infrastructure, capital goods, healthcare. So there are three brokerages that are underweight on capital goods so far. When it comes to other names like JP Morgan, now they are overweight on materials, which means that they're bullish on cement and metal as well. Financials, consumer discretionary, consumer staples, entire FMCG space is something that JP Morgan is quite bullish. Hospital stocks, real estate, defense and power, while they're underweight on IT and pharma names. This is coming in from JP Morgan. And lastly, when it comes from Morgan Stanley, they are bullish on financials, consumer discretionary, industrials, capital goods. This is one brokerage which is bullish, while they're underweight on energy, materials, utilities and healthcare. So far what I'm seeing is that three brokerages are at least underweight on the IT sector for 2026 and on capital goods as well, while most of them are bullish when it comes to names like consumer discretionary, consumer FMCG names, consumer discretionary and also telecom.
I think financials makes it to the list once again, as it did last year as well, but this year more reasons than others.